DuPont is about to deliver a 40% return to its shareholders. Once known for its controversial past in the chemical industry, DuPont has reinvented itself, now focusing on specialty materials and expanding into the semiconductor sector. Right now, DuPont provides advanced materials and solutions to major semiconductor manufacturers including Samsung and TSMC. And if you're not familiar with TSMC, they're a key player in the semiconductor world, producing chips for giants like NVIDIA and AMD. DuPont Semiconductors business has been performing so well that the company is now spinning it off into a new independent company called Qnity. This process is called a spin-off, and it brings major benefits for both companies, the new one and the parent company. If you want to understand how spin-offs can lead to higher returns in the short term and mid-term, check out my previous videos, where I break down exactly how they work. Let's take a closer look at why Qnity could be a great opportunity. Qnity's balance sheet looks solid, with 13 billion in assets against 6 billion in liabilities, meaning its assets are twice its debt, a healthy position in this industry. The company also grew its revenue by 7% and achieved a strong 27% EBITDA margin last year. It reported 434 million in earnings. And since its sector trades in an average PE ratio of 30, that implies a market cap of around 13 billion. Just take a look at Entegris, a competitor in the same sector with a similar market cap, EBITDA, and access to debt, yet is currently trading at a PE ratio of 50. This gap represents a huge discount for Qnity stocks, creating a potential upside once the market starts to price it more accurately. DuPont has announced that it will distribute Qnity shares to its shareholders on November 1st. That means if you buy DuPont stock before the distribution date, you'll be entitled to receive shares of Qnity once the spin-off is completed. So, how can you take advantage of this spin-off opportunity? Well, personally, I've already invested in DuPont to get those Qnity shares. But the most interesting part might come after the distribution date. That's because Qnity stock is likely to trade below its fair value in the first few months. As I've mentioned in previous videos, spin-offs often start trading either very unstable or undervalued, and that creates a tremendous opportunity for investors. Let's look at a few examples of recent spin-offs from this year. Resolute Holdings was released in February. After 2 tough months, the stock soared 200%. SanDisk, also released in February, stayed flat for about 5 months and then jumped 250%. And Melrose went through 3 rough months before rallying 46%. And if you'd like to learn more about these companies, their short-term performance, and the spin-off process behind them, check out my previous analysis on this channel. It's also worth noting that DuPont has a strong track record with spin-offs. The company has already completed 3 successful spin-offs in the past. Back in 2015, DuPont spun off Chemours, which dropped about 80% in its first year, but then skyrocketed more than 1000% afterward. In 2019, DuPont completed 2 more spin-offs, Corteva, which traded flat its first year and then doubled the next, and Dow Inc., which had a weak first year but also jumped 100% later on. These 3 spin-offs have one clear thing in common: they all took off in the medium term instead of the short term. If you're wondering why some spin-offs take longer to rise or perform much better than others, it all comes down to intrinsic value. Yes, spin-offs often create great investment opportunities, but you still need to analyze the fundamentals behind each one. Don't worry, we do that for you here on Spin-off Bull. As we saw earlier, Qnity shows strong financials and operates in one of the hottest sectors right now. But wait a minute, what about DuPont? How does it benefit from this spin-off? Well, after DuPont spins off Qnity, the company will cut nearly half of its debt. Right now, DuPont carries about 13 billion in long-term liabilities. And under the spin-off agreement, Qnity will assume around 6 billion of that debt. That might sound like a heavy burden for Qnity, but with the bullish momentum in the semiconductor sector and its competitive position, DuPont clearly believes Qnity can handle that debt with ease. If you have any question about Qnity, DuPont, or spin-off opportunities, feel free to drop them in the comments. I'll be happy to answer them. And if you want to stay updated with the latest spin-off news and investment insights, make sure to subscribe. Thanks for watching.